I want to use this video to recap a lot of stuff and not really introduce any new information.
No!
But I would just want to make sure that we try to go over everything that's necessary, and it could be from the TradingView platform to how to pick the currency to how to trade and so on.
Make it so, number one.
If you have a green candle, the bottom is the opening price and the top is the closing price. So it is green because it opened lower and closed higher. So the direction is up. In a red candle, it's red because it opened at the top and closed at the bottom. So candles tell you open and close, and the color tells you which direction to read this. Then the thin lines called the wick are the high and low, highest and lowest price sells or buys for that period. So it could have happened somewhere in between the open and the close of the candle. And somewhere in that time period, there was a lower and a higher point, and that's what the wick says. So, but first of all, right now, what I want to show you is I have the same pair on both windows. I just have two different browser windows up. Same pair, same broker, IDC, but this happens to be a 1 minute interval window, and this one happens to be a 5 minute interval window. And I might not have explained that before. So if you'll notice here, there are some yellow vertical lines. This over here in the 5 minute window, there's a vertical line that crosses right through one 5 minute interval, which is the previous one, and there's another vertical line that's crossing through the current 5 minute interval. Over here, those two lines are exactly these two lines. And I can prove it to you by clicking here. I'm going to click to add a vertical line, and I'm going to go ahead and add it to the future 5 minute interval. And you'll notice it show up here wherever it's supposed to show up in the 1 minute interval. Let me click here. There it is, and there it showed up. So what you're looking at is that each one of these is a candle for 1 minute, 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. They all together made up this one. This green candle that you see moving is the current result of the combination of the first minute here of the series and the ongoing second minute. That is what you're seeing here. So some people like to trade at 5 minutes. Some people like to trade at 15 minutes. Some people are able to trade at 1 minute. There's a lot more noise. I like to mark off the boundaries of the months in this case. That's like the purplish or pinkish, whatever color that is for you, to kind of help me do some analysis. And then over here, at the very current month, I've marked off the days of trading that have happened so far. So the next thing would be, what currency pair do we want to use to trade with? If you watched the previous videos, hopefully you picked up on the fact that, or the idea that you want a currency pair. So I'm talking from a retail trader's point of view, where you're sitting in the Eastern time zone. And so you want a trading pair that has predictable volume. If you look, so this is one of the reasons I marked off days. The day volume swings or envelopes or curves, the way they look, the shapes, where you have the higher and the lower volume times are pretty similar every day. So you want that. You want consistent volume at the right time of the day. You want enough swing And because the more swing, meaning pip movement, right? So say that down here you did a buy order and up here you did a sell order. That difference, the number of pips moved, the more they move, as long as it's predictable and you can use technical analysis and they make sense, the better you are at making money, whether you're buying or selling. You could have sold, for instance, up here and bought down here, and that would still be pip movement. So you don't care whether they're going up or down. What you care is pip movement. I happen to take the Euro USD pair for the current week. So right here, the current 2 weeks, I think, right here was the month boundary of March 2022, and then the trading days since. And I have them at a day interval view. So each one of these bars is a day of trading. And then what I did is I found on the chart some of these low and high boundaries for these candles, and I wrote out the actual rate. And then when I do the math of difference between them for some of these candles, this red candle, for example, that was 144 pip movement, which meant that the green candle is more than 144 pip movement. This one was 71 pips. This one was 84 pips. Some of these are less. You want to pick a pair that gives you enough swing over the day, and probably not even more so with lesser intervals. So like over the minute or over 5 minutes or over 15 minutes. You want to pick a pair that has plenty of movement, as long as it's predictable and not just random. And because if it's too volatile, then you can't. It's hard to predict. Now you can also just go by suggestion. So you can just Google, for example, best, and you can tell people to do this, right? Best Forex pairs to trade, best Forex pairs to trade during the New York session, and so on. You can go that route. Make sure that then you filter out by date and just pick some pairs. At the moment, I'm staying with any pair that has US dollars as the quote currency, which makes, because my account is funded in US dollars, it makes me using the online calculators easier. The next thing is, after you pick the pair, I've talked about selecting the right broker. So these are the brokers that you're allowed to use when you're paper trading. And what you could do, for example, is you pick one of these and then look at the volume here and compare, just watch it, compare that volume to, say, picking another broker. And then you just pick the one you think has the most volume, and IDC seem to have the best consistent volume overall. So let's talk about now using trend lines and resistance and support to help you. So what I do, I look at this. Remember, these are months here, and then this is the current month so far. There's a few trading days. I look at what's the lowest point in this time period of almost 4 months, and it looks to be around here. So I'm just going to draw a horizontal line down around here somewhere. And typically green means support. And support means that you're expecting that this would be the minimum that the rate would go down to. And then I look up here, and further back it might have been higher, but it looks like this level, this little part here, and then these peaks, this peak and this over here, this looks to be like the current maximum. So I'm going to draw another horizontal line about right here, and that will be my maximum, and that is resistance. And what that means is that the rate has a tough time
crossing that boundary. The next thing that I like to do is draw trend lines. And those are now going to be used not at the month's view, but more closer to where I'm going to be actually trading. Because remember, current trading is happening way over here at the right. So I'm going to start by drawing some angled trend lines. So this is a trend line right here. And I could draw, and so trend line, you look, so for support, you look for negative peaks, right? But in this case, I would say I was going to draw a support trend line, something like so. And I'm taking into account this low part here, this low part here, and this low part here. And I, of course, would color that green because it is a support line. But I start extending trend lines into the future because that's what's going to help me predict. However, the future of this trend line is actually lower than the maximum. I mean, I could leave it. You know what? I'll just leave it. So now I'm going to draw another trend line for the resistance. And again, I look at this side of the chart and I say, okay, this looks like something like this would be the resistance. So that means I have, at this view, at a 1 hour interval, it looks like I have some sort of channel, trending channel, a downward trending channel where the chart values are going up and down within this channel. And this helps me predict.
Now I'm ready to do more analysis. So what I'm going to do is I'm going to zoom in and let the history flow to the right. And then I can draw more lines if I want to. And I want to notice something here. First of all, here we have a condition right here at the very end, right here, where this RSI relative strength indicator, all I'm going to say is that you have an upper extreme, a lower extreme, and the middle. And typically this middle line, if the yellow is an average, so it's the purple, but you can pick either one. If they are above the midline and close to the top edge, the pair is considered overbought, meaning it's a good indicator to say, hey, there might be a reversal. And in fact, there was. It got to be overbought here, and then it immediately started reversing and going down. Now it's trending over here to the oversold position. But look, here is another area where it was oversold. It's a little lower than this. Actually, no, that's the yellow is the average. The purple is down here at oversold. So this is oversold as well. But yet this part hit the bottom, but this part that already looks like it's reversing is higher. So being at the same oversold condition as back here, this little piece is higher. So I could draw a trend line here, somewhere like from here to this way out into the future, and this is support. And I say, the situation seems to be improving. Now, there's something else that I can see here. Looking at this long-term trend line, the red, that's part of the channel, and this short green one, it looks like it's wedging in, right? It's narrowing in into this wedge. Usually when that happens, you look for what's called a breakout. It either breaks out toward the positive or breaks out toward the negative. That will help you as a trader decide, okay, if you think it's going to break out positive, you want to put a buy order and then a sell order when it breaks out. If you think it's going to break out negative, you want to put a sell order and then a buy order after it breaks down.
Okay, so we are ready to actually focus in on the trading day. So I'm going to move the intervals down to 1 minute, and then I have to grab all this stuff. And here we are. This is the beginning of the day. This is, I'm scrolling. This is as much data as I'm going to get right here. So I get a little bit of the previous day, and then this is the current day. I'm going to change the scale. Now, this is late hours here, so I'm going to ignore that. Let's just pretend that didn't happen. Let's leave it right here. So pretend that we only have gotten to the yellow lines, right? So there is what I have so far of the trading day. And I'm going to do just zoom in. So I can now draw more trend lines. We have what looks to be a very sharp drop in resistance here. So that's red. I don't know why it didn't stay. Red. And then we have you can draw as little or as many as you want, and you start to get an idea of what's going on. There's that. I think that is good enough, actually. So now again, we pretended that this isn't here, right? So if you were actually going to trade, okay, let's say that the graph was somewhere in here in this early part of this channel, and you already drew out. Let's say that all you had was this spike, this spike, this spike, and this spike, and then down here you had just this one and this one. You still would have drawn those two trend lines the way I see it. So what you would do is, if say that the chart has only made it down to here, definitely an oversold condition. The volume is pretty steady. There's no reason to believe that it won't go up. So you would put a buy order right here. You could put a limit order or a market order and get a buy-in right away. Just hang on to it and watch it, and watch your RSI and let it crawl up. And then you could put a sell order up here, and you would have made, we could do some lines here. Let's see. This level is 981 pips. This is 6 or 7 pips. So that's like 100 pips, I believe. Now let's use some of the calculator.
No! No!
I'm going to cut the video right here and continue the recap in the next video.